Hey guys, today let us quickly see how to analyze a stock within 3 minutes. First, select any stock and view chart. We can see that the stock has shot down from 90 rupees to 40. Now currently it is trading at 48 rupees, right? You need to analyze and you need to read why the stock has came down from 90 to 40 rupees. And the trading indicators, the ADX suggests that currently it is in a downtrend and there might be a possibility of trend reversal, right? It can move up. Even the stochastic RSI is suggesting that the stock is in oversold zone, right? Okay. The next step, what we do is go to the fundamentals and see the 1 month return is 6.3% negative and 1 year is negative 5%, right? And the stock beta is 2.52. That means that if a nifty 50 or indices moves a 1%, one point, the stock is moving above or below 2.5%, 5 times, right? And the P is just 6.44%, 44 when we compare to sector P of 37. That means the stock is undervalued, right? Even the sector PE is 9.12, but the PEB is just 1, right? The next thing we do is click on details. So it would redirect to ticker tape, right? Just scroll down and there are these many 5 basis points, right? Basic points. The intrinsic value, return versus FD, entry point, and no red flags. All are in green, right? And dividend returns are in red. We need a growth stock, right? Not the dividends. So scroll down. Same thing, you can see the PE is 6.44, PB is 1, and dividend yield is slightly low, that it's 0.53, right? The next thing you have to do is go to screener, search for Kelton Technologies. I've already kept it open. Just open Kelton Technologies. So about the company, the Kelton Technology Solutions Limited offers services in digital transformation. Yeah, this can be one of the major point or a major segment we have to concentrate in IT, since everything is going digitalized, right? The market cap is 458 crores and current price is 47.6, and the 52-week high is 92 and low is 39. So we are almost near 52-week low, right? The stock pay is just 6.28% and the book value is 43 rupees. And if you see, the ROC is 18.5%. That's very decent. And ROA is 17%. So we usually prefer ROC and ROE should be above 15%, right? And industry pay is 29 and the stock pay is just 6, right? It's it's almost undervalued stock. And EPS is 7.58 rupees. It's pretty good. And enterprise value is 529 crores. And the thing you have to worry about is the pledge percentage. 12.7% of the stocks are being pledged, and there is no change in promoters holding. Scroll down, we have already seen the chart, right? So the stock is trading at almost same book value, and promoter holding has decreased over past 3 years for negative 8.34%. Let's see a peer comparison. Kelton is current market price is 47 rupees. PE is at 6.28. It's undervalued than all its peers. Market cap we already discussed, and quarter profit variable percentage. So it's one of the least. It's the least, and it is 13.21%. ROCE, it's also look one of the least. It's 18%, and ROE is is one of the least, and it's better than persistent systems. And debt to equity ratio is pretty good. It's 0.26. So let's quickly jump to profit and loss. So the sales has jumped from 39, all are in crores, right? Crores rupees. 13, it was at the 39 crores in 2012, and it has grew till 615 crores in 2017. And stock is the sales haven't changed for almost for past 5 years. It's floating around 800 to 700. And the operating profit, that's the sale minus expenses. So even the operating profit is floating around the same range, even the operating profit margin. So the net profit as well, since all other values are the same, even the net profit is almost floating around 77 to 71, right? So the main thing we have to highlight is 5 years sales growth is just 17%. uh, it's a pretty decent number, and we don't have data for 3 years since it's almost constant. And trailing 12 months, it's 5%, pretty good. And compound profit growth, right, for 5 years is 18. And since there is no much change in 3 years, it's just 1%, and trailing 12 months is around 10%. And stock price CAGR is 34% for 10 years. It's really good. And negative 3% and 16% for previous 3 years. ROE is decreasing slightly, where it was at 23% 5 years, 3%, 20% in 3 years, and in last year it is just 17%. And just go through the balance sheet very briefly. So the reserves been constant over past 4 years. Share capital, sorry, reserves is increasing. That's good. And borrowings, if you see, the borrowings has been decreasing, right? It was 114, 123, 132, and it's 109 crores. And the cash flow, right? Operating cash flow is 79 crores, and cash from investing is 32, and cash from other financial activities, let's go through it. They are mentioned as other financing items. It's a negative 67 crores. So from financing activities, they are losing 102 crores, but the net cash flow is very decent, and it's been increasing over the years. And debtor days is being increased in last 5 years. So it was at 87 days. That means you do some work to your client, and they will pay you the amount after 87 days. Yeah, it's at 97 days currently. It's slightly been increasing. So does the cash conversion cycle. And the ROCE, in the last 5 years it is being decreased constantly, right? 32, 34, 28, 21, and 18. It's one of the concerns. Promoters have decreased the shares from 55 to 52%. Even the FIIs and the DIS are pitched in, and they are buying, even the public. So this is how to analyze any stocks within 3 to 5 minutes. So the major highlight of this company could be they are working on digital transformations, ERP, and other IT services, and they have operations across US, Europe, India, and Asia Pacific, with around 1,500 employees. Do your own homework. This was just for educational purpose. This is how we analyze any stocks, right? Thanks. That's the day.